later on. As of for now, we will start with our next part, that is the methods of national income. Okay. First, we will understand a little bit theoretical part, and then we will start with the sums. Understanding theory is very important, right? So, introduction mein national income is considered as the most comprehensive measure of the performance of economy. However, its measurement is extremely complicated task. Measurement of national income is considered extremely very important for the economy, and calculating national income is a great task. We know that. So when factors of production takes place, then the factor incomes are paid to the factors of production for their factor services. We know that, right? We have seen during the time of circular flow of national income that how factor services are provided, factors of productions are there, and in return we give them factor incomes. We know that. So it means there is an income flow corresponding to the output flow. So income and output, inflow and outflow goes hand in hand. So factors of production spend their income on the purchase of goods and services by making consumption expenditure. We know that how household makes consumption expenditure on firms, on the goods and services which have been prepared by the firms. So production gives rise to income. Income results in expenditure, which in turn generates income again. So this we have already seen in the circular flow of two-sector economy, wherein there was only two sector, household and firms, and how the income is getting generated, how that income is becoming expenditure. Everything we have studied there. So similarly, national income of a country can be measured by three different methods. There are three methods to measure national income: value-added method, income method, and expenditure method. So there are three total methods using which you can measure national income: value-added, income, and expenditure. So this is the sequence which we are also going to follow. First, we are going to see value-added method or income method, and then we'll be talking about expenditure method. So we have three different methods to measure the national income, because production, income, and expenditure are three different phases of circular flow of income. Use a particular method depends on the availability of reliable data. So we have three different methods to measure national income. Why we have three different methods? Because in the economy also there are three different activities taking place: production, income, and expenditure. Use of which method will completely depend upon the data which is available in the hands of the economists. They will decide that whether they want to use value-added method, income method, or expenditure method. Completely depend upon the government, the economists who are going to measure the national income, that which kind of method do they want to use. So all the three methods give same value of national income because they are same physical output at three different phases. Whatever method you use, whether you use value-added method, whether you use income method or an expenditure method, every method will give you same value. That also, while we will solve numerical question, we will see this thing also, that how given set of question you use any method, you are going to get the same answer. So the task of estimating national income is entrusted with Central Statistical Organization. So in India, who calculates national income? CSO. And what is CSO? Central Statistical Organization. They are going to measure national income. Now, methods of measurement of national income, out of which the first method is value-added method. Now, what is this method exactly? So, this method is used to measure national income in different phases of production in the circular flow. So, during the time of production of goods and services, we are going to measure the value, and that value is going to be called as the value of national income using value added method. It will show the contribution of each producing unit in the production process. So here basically we are going to calculate the value which has been produced by each producing unit. How? We will see the example for it. Every individual enterprises adds certain value to the products which it purchases from some other firms as intermediate goods. That is, of course, now say suppose the person who is going to manufacture bread, he is going to purchase flour from the miller, right? He is going to purchase the flour from the miller, and the flour is nothing but an intermediate good for this seller of bread. It's an intermediate good. Intermediate good means what? The goods which are going to be used for further production of goods and services. Those are goods are called as intermediate goods. So the flour is an intermediate good for this bread seller. Yes, and every producer of intermediate good will be dealing with some or the other money. Now, this seller of bread is not going to get the flour for free of cost, right? The seller will pay something to this miller for purchasing that flour. So that means that is a contribution which has been done from the miller's end. When value added by each individual firm is summed up, we get the value of national income. And value added method is also known as, see, these are the alternative names of value added method. So in the examination, there are possibilities that they will not directly ask you to solve the question using value added method. They might tell you to solve the question by product method, inventory method. Product method and inventory method and net output method are the most famous one. The other two are not generally used very frequently. Industrial origin method and commodity service method. These methods, the name are not used frequently, but product method, inventory method and net output method, these names are used frequently. So you have to know that these are the alternative names of value added method. Concept of value added. Now, what exactly value added means? So, value added refers to the addition of value to the raw materials by a firm by virtue of its productive activities. Value means it is money. So, money value added by the each raw material or intermediate producing companies or organizations, the value which they are producing, when you total that value, it will be called as value added method. So it is the contribution of the enterprises for the flow of goods and services, and it is calculated as, very important, value added method is calculated as the difference between the value of output and the value of intermediate consumption. That means how much did you spend on intermediate consumption minus how much you are getting from selling that product. For say suppose for producing bread, I had to go through 200 rupees. And after selling the same bread, I have received 300 rupees. So what do they say? How do we calculate value added? Value of output minus intermediate consumption. So value of output is how much? 300. And intermediate consumption is 200. So my value added would be 100. This is what value added method basically means. How much you have spent on your intermediate consumption for producing the goods and how much you are receiving in return after selling those goods. Now they have given you one example. Let us consider one example. Suppose a baker needs only flour to produce a bread. So there is a impractical example again, because of course a baker does not need only bread to produce. It needs so many different things, right? Bread is not flour is not the only thing which is required for producing bread. There are so many different other raw materials also which is required for making bread. But here we are taking a small simple example that just imagine that a baker needs only flour to produce the bread. So there is one baker who requires flour to produce bread. Clear here? Till here. Next, he purchases flour as input for rupees 500 from the miller, and then by virtue of its productive activities. Till here, let us understand. He purchases flour as input. So flour is what? It is an input, or you can say it is an intermediate good for the baker. So he has purchased this flour for 500 rupees. Baker is purchasing flour for producing bread, and he has purchased flour for 500 rupees, and that flour is nothing but the intermediate good of now the baker. He has converted that flour into bread and sells the bread for 700 rupees. Now he is selling the bread for 700 rupees. So here value added would be how much? In the previous slide we saw how do we get value added? Value of output minus value of intermediate goods. So here how much would be value added in this given example? From this given example, how much do you get it? Didn't understood? This is my total output which I am getting. This is my value of output, and this is my value of intermediate good. Then if I want to find out value added, then how much is it? No, not 1200. It would be 200. You never include this plus this. Value added is value of output minus value of intermediate goods. See, value of output minus value of intermediate consumption or intermediate good. So here the value of output was 700 and value of intermediate good is 500. So you get the answer as 200. That's it. You have what you have to do. You don't have to count the different things. You just have to count the final value. Now for say suppose with flour, he might have also taken for say suppose soda, baking soda, food soda for 100 rupees. Then this would have also been the intermediate consumption. So this should also be reduced. So 700 minus 500 minus 100. Like that, whatever the answer you get is the total national income using value added method. Okay, so see what they are written. Flour is an input, that is an intermediate consumption or intermediate goods. Its value is 500 rupees. So your value of intermediate consumption or value of intermediate consumption is 500. Bread is output and its value is 700. So value of output is 700. Difference between the value of output and intermediate consumption is termed as value added. It means that the baker has added a value of 200 to the total flow of final goods and services in the economy. Okay, so value added by each producing enterprise is also known as GVA at MP, that is gross value added at market price. So what is the aggregate of value added method? The aggregate of value added method is GVA at MP. So value added method is denoted by the aggregate GVA at MP. You can also call it as GDP at MP, where domestic means nothing but value, product means nothing but added, and MP. So you call it as GVA at MP or you call it as GDP at MP. It is one and the same thing. So what is the aggregate of gross value added method? GVA at MP or GDP at MP. So value added by Baker is rupees 200, can be termed either as value added or GVA at MP. So that 200 can be called as GVA at MP. It can also be called as GDP. So sum of all producing enterprises within the domestic territory of a country for 1 year is equals to GDP at MP. See here, GVA at MP is equals to GDP MP. So GVA MP is also called as GDP MP. Next, they have again explained you the meaning of intermediate goods and final consumption. So again, I don't think so it is very important for us to go in depth, but I'll just explain you what is intermediate consumption. We know that, okay, the raw materials or the goods which are required for the further production of goods and services is called as intermediate consumption. Okay, so example, expenditure on flour is intermediate consumption. So for say suppose manufacturing cloth, you need material, you need buttons, not cloth, shirt, manufacturing of shirt. You need materials, you need buttons, you need thread, tissue, you need needles. So you need different things. So all of these things will be called as intermediate consumption. All those things which are used for doing the production of good, it is called as intermediate consumption. So good is shirt, final good is a shirt, and all of these things are the intermediate consumption. Okay. So intermediate consumption is the goods which are going to be required for further production of goods and services. And final consumption refers to the expenditure on goods and services meant for final consumption and investment. So final consumption means those goods and services which are ready to consume, which you can finally consume. For say example here, the expenditure on bread is a final consumption. So flour was an input or was an intermediate consumption, and bread, it is a final consumption because it is finally ready to consume. No further production required for this product. Okay. Fine. Next thing important. While doing value added method, you will be getting, you should know there are two terms, that is import and export. We know this, right? Because in every economy, and since our country is an open economy, there are chances of importing and exporting of goods and services from other countries. So whenever they give you just imports, then it's fine, you can take it as it is. Okay, but if they tell you domestic purchases, I will give you this in writing while we will write the formula, but now also understand. If in the question domestic purchases is given, domestic purchases means what? The purchases which has been only made in the within the domestic territory of the country. Here the imports or the goods and services which we have purchased from the foreign countries are not included. We will have to include them. So what we will do? We will add imports. Okay. Here what we will do is we will add imports in the domestic purchases. If value of intermediate consumption is given, what they are saying, listen to it very carefully. If the value of intermediate consumption is given, then imports are not included separately, as imports are already included in the value of intermediate consumption. But if domestic purchases are specifically mentioned, then imports will be also included. If they are giving you intermediate consumption, if in the question, if at all, they are writing intermediate consumption, then in this case, even if they are giving you imports, export, anything, you don't have to bother. You just have to take the value which is given against this intermediate consumption. But in the question, if they have given you domestic purchases, then in that case, you have to use your logical sense that domestic purchases means they have included only the purchases which is made within the domestic territory. But we also have to include the purchases which we have done from the foreign country. So we will have to add imports to it. If only directly intermediate consumption is given, take the value of intermediate consumption. This will be the value of intermediate consumption. Take that as it is directly. But if domestic purchases is given to you in the question, then in that case you will have to add imports, because while calculating national income, we are going to include both domestic purchases plus national purchases or purchases made from the foreign countries. Both the things we are going to include. That is the reason if domestic purchases is given to us in the question, then in that case you have to add imports. But if directly value of intermediate consumption is given to you, then in that case you don't have to do anything with domestic purchases or imports. So even if in the question they are giving you value of intermediate consumption, domestic purchases and imports, you will quietly just take the value of intermediate consumption. No need to take domestic purchases and imports. But if they are not giving you the value of intermediate consumption directly, then they might give you domestic purchases and imports. So you will have to add the domestic purchases and the imports. Okay, so this was related to import. Now let us talk about exports. Export means what? Selling of goods and services. So it will have relationship with the sales. Import means purchasing of goods and services. So that was why it was related, or it came under intermediate consumption. So purchases might be made for intermediate consumption, for purchasing inputs. Whereas sales, export means nothing but sales, so it will have the direct relationship with sales. So same way, exports are also not separately included in the value of output if sales are given and domestic sales are not specifically mentioned. But in open economy, sales include both domestic sales plus export. So same way, if direct sales is given to you in the question, then no need to do anything else. Just take the value which is given in front of that sales. But if direct sales is not given and they are domestic sales, then you will have to add export. You will understand these things more once you start solving the question. Right now, this is all the theoretical part, so it will take time for you to adjust and accept and understand it. When we will solve the numerical question, it will be very easy to implement. So if directly in the question sales is given, take the value of that sales. But if domestic sales is given, then you will have to add exports. Now, what is value of output? So, value of output refers to the market value of goods and services provided during a period of one financial year. So, value of output is nothing but the market value, the price at which the goods and services are being provided in the market. So, for say, suppose there is good A, good B, good C, good D. Now these goods can be anything. A can be clothes, B can be shoes, C can be bags, D can be grocery, anything. Good A is in market, it is sold for 50 rupees. B is sold for 100 rupees. C is sold for 300 rupees. D is sold for 200 rupees. E is sold for 500 rupees. So this is nothing but value of output. This is called as value of output. Okay. And in how much? One financial year. And India follows which financial year? We follow which financial year? Which financial year do we follow? Yes. 1st April to 31st March. This is the financial year which we follow. And the goods and services produced. Now here I mentioned good, it can be a services also. So the goods and services produced in one financial year, the value, the price or the market price of those goods and services are included in value of output. Now, how to measure value of output? I'll be giving the formulas for everything which will make solve the question very easier. Just go through this theoretical part and try to understand it. When I will put these things in formula, it will become more easier for us. But as of now, just try to understand what it is. So how do we measure value of output? See, first of all, we said value added is equals to value output minus value of intermediate consumption. Now, how do we measure value of output? If it is directly given to you in the question, well and good. But what if it is not given to us directly in the question? Then, when the entire output is sold in an accounting year, the value of output is sales. So, value of output can be more derived as sales. When the entire output is not sold in the accounting year, then the unsold stock is added to the value of sales. Unsold stock is the excess of closing stock over opening stock and termed as change in stock. So one more word we get to know is change in stock. When all the output is not sold in one accounting financial year. This too is pure accountancy part which you all know, right? We know what is opening stock and what is closing stock. And difference between opening stock and closing stock is termed as change in stock. Same thing it is there here also. If the goods are not sold at the end of the financial year, then they will be coming under the closing stock. And in the new financial year, how much opening stock do we have? So likewise, the difference between opening stock and closing stock is nothing but change in stock. So value of output is calculated as sales plus change in stock. Change in stock is calculated as closing stock minus opening stock. Okay, very important part that how do we actually calculate these things. So value added, we know value of output. What did I say? Value added is nothing but value of output minus value of intermediate consumption. Now, if value of output is not given to us directly in the question, then how we will calculate? So, for calculating value of output, sales plus CIS. CIS is nothing but change in stock. Now, what if CIS is not given to us directly in the question? Then the formula is closing stock minus opening stock. Right? Now, one example they have given. If a firm manufactures 1,000 pairs of shoes annually and sells them 500 pair of shoes, then what is the value of output? So we know what is the value of output. Firm manufactures 1,000 pairs. Manufacturing is 1,000 pairs and selling them in 500 rupees. So the price of the chair is 500 rupees. Then what would be the value of output? 1,000 into 500, that is 5 lakhs. Okay, we'll get it clear more, don't worry. Next important thing comes is the industrial classification of producing enterprises. Now, when we say that we include all the industries, it means we include primary industry, we include secondary industry, and we include tertiary industry. Okay, so first is primary industry. Read whatever is written over here and ask me if you have any doubt, you don't understand. Read the meaning of primary sector. Okay. Next, secondary sector. Again, read it. Yes, primary goods or primary sector is the sector which will take out or bring the raw materials. Secondary sector will convert those raw materials into finished goods. Yes. And third is tertiary sector. Tertiary sector will include all the industries basically, or the service sector. So tertiary sector is also called as service sector because it provides services. So banks, then government, transportation, education, hospitals, all of these things comes under tertiary sector. So in the value added method, we are going to include primary sector, secondary sector, and tertiary sector. Now, precautions, extremely important. Important in theory sense also, as well as important while solving practical questions. Theory, at times they might ask you 3 marks or 4 marks question, explain the precautions of value added method, as well as these precautions you have to take care. You should know all these precautions while solving the practical questions or the numerical questions. So let us see the precautions one by one. First, intermediate goods are not to be included in the national income. When we studied the meaning of national income, we said that national income is nothing but the value of final goods and services. So there and there itself only we cleared that only the value of final goods and services are to be included and not the value of intermediate goods. That means what? So for say suppose my final good is cloth. Sorry, not cloth. Let us consider my final good is a shirt. And to get this final good, I am going to require few intermediary intermediate goods or intermediate consumption. Like what? Like material, bread, buttons. So in on and all, I spend 200 rupees on intermediate consumption and I sold this shirt for 400 rupees. Right? I sold this shirt for 400 rupees. So according to this precaution, it says we don't have to include intermediate goods. We don't have to include the value of intermediate goods. We will be just including the value of final goods. So that means while computing national income, I will be taking only this 400 and not this 200. In a way, you can say this 200 is included only in this 400, right? In a way, it is included only. The person who is going to sell the shirt, what he will say? He will say, I have spent 200 rupees. Now, there should be my profit also. So, let me sell the shirt for 400 rupees. So, out of 400, this 200 I have spent on the intermediate goods and the remaining 200 can be my profit. So in a way, I can say that this 200 is already included in this 400. But when I will calculate the national income, I will be including only the value of final goods and not the value of intermediate goods. This is what my first precaution says. That since such goods are already included in the value of final goods, if they are included again, it will lead to the problem of double counting. Very important. So while computing national income, say suppose I take 600, 200 from here, 400 from here. Then just imagine in this 600, 400 is getting repeated. How it is getting repeated? This 200 and this 200. 400 is getting repeated. Actually, how much should I take? Actually, I should take only this 400. I should not take 600 national income. If I take 600, then it will lead to the problem of double counting. That means I am counting the value two times, which will make my total value of national income wrong. So I should avoid it. And that is why we say that this is the reason why we do not include the value of intermediate goods, because that value has already been included while selling the shirt, selling the product. You only imagine, we know that, right? If the seller is producing the good for 10 rupees, then it's but obvious that he is not going to sell that product in the market for 10 rupees. He might sell it for 15 rupees. So in that 15 rupees, 10 rupees is the cost which he has incurred in producing that pen, and 5 rupees will be his profit. So it's but obvious that I should include only 15 rupees in my national income and not 25 rupees. If I include 25 rupees, then in that case, it will lead to the problem of double counting. Is it clear, or should I give you a brief example, one more brief example? Did you understand that why the value of intermediate goods are not included while computing national income? If not, I'll give you one more example. Oh, fine. See, for say suppose there is a producer who produces pen. For producing pen, he is going to require intermediate goods. So he spent rupees 10 in producing one pen. So he spent rupees 10 rupees. His expense was 10 rupees to produce this one pen. Will he sell this pen for 10 rupees in the market also? Just imagine. 10 rupees he is spending, 10 rupees is his investment or the expense to produce one pen. So when he will sell that pen in the market, will he sell it for 10 rupees only? No. If he sells it for 10 rupees only, then he will be in no profit, no loss situation, which he doesn't want. Every producer existing in the market, their prime motto or prime objective is to earn profit. So here also the producer who is producing the pen, his motto is to earn profit. If he is requiring the expense of 10 rupees to produce one pen, he will sell the pen for 10 rupees in the market. So out of this 20 rupees, 10 rupees is the expense which he is incurring to produce that pen, and the remaining 10 rupees would be his profit. So now while computing national income, should I take this 20 rupees or should I take 30 rupees? 10 plus 20, 30. What should I do? Should I take 30 rupees or should I take 20 rupees? Very good. 20 rupees. Because this is the market value of final goods and services. While computing national income, we include only the market value of final goods and services. We do not include the value of intermediate goods or intermediate consumption. Because if we include the value of intermediate goods also, then it will lead to the problem of double counting. Because here in the final good, in the price of final good, there is also the price or the expense of the producer included already. So in that case, I should not take 30 rupees. If I take 30 rupees, then it will have this 20 rupees, that is the final value of the goods and services, as well as this 10 rupees, that is an intermediate consumption. So I don't have to include intermediate consumption while computing national income. I just have to take the value of final goods and services produced in the market. So I'll just take 20 rupees and not 30 rupees. Because in this 20 rupees, the value of intermediate consumption has already been included. If I include it once more, then it will lead to the problem of double counting. That is wrong. Okay. One last more example I will explain you, then you will get an idea, I think, more briefly. Say suppose this is bread, and to produce bread, the producer has to go through few intermediate expenses or intermediate consumption. His intermediate consumption was for 20 rupees and the bread sold in the market was for 40 rupees. So first thing, we already know that while computing national income, we do not take the value of intermediate consumption, we just take the value of final goods and services. Okay? This is the final good. Fine. Now, now say suppose I am the producer of that bread. I was the producer of the bread. I had to spend 20 rupees in producing bread. Now it's but obvious that I will not sell the bread same for 20 rupees. Otherwise, I will be in no profit, no loss situation. What I will do, I will add extra 20 rupees to it and make my profit and sell the bread. Now in this 40 rupees, if I divide, then 20 rupees is my intermediate consumption and 20 rupees, this 20 rupees is the money or the expense which I have spent on intermediate consumption, and the remaining 20 rupees is nothing but my profit. So that means already this intermediate consumption has been included in the value of final goods and services. And if again I include it while computing national income, then it will lead to the problem of double counting. So now tell me, while computing national income, should I include 40 rupees or should I include 40 plus 20, 60 rupees? Should I take 60 rupees or should I take 40 rupees? Very good. That was instant. Very good. And behind this, what is the logic? Two logics. First logic, while computing national income, we include only the value of final goods and services. We do not include the value of intermediate goods. Second logic, why don't we include intermediate consumption or intermediate goods? We don't include intermediate goods or intermediate consumptions because it is already present in the value of final goods and services. Okay, I hope now it's clear to you. Still, if there is any doubt, let me know. I'll repeat it once more. Any doubt? Any more? Okay, once more we will repeat. Intermediate goods are not included in national income. Two reasons behind it. First, we always include final value of final goods and services while computing national income. Second, why don't we include intermediate goods or intermediate consumption in national income? Because it is already present in the value of final goods and services. So it is already present over there. If once more I include, then it will lead to the problem of double counting, which should not be happening while computing national income. Second, sell and purchase of second-hand goods is not included. Sell and purchasing of second-hand goods, again, we are not supposed to include. Say suppose in 2018 I have purchased in 2018 I have purchased a mobile phone. So this transaction will be included while computing the national income for 2018 to 2019, right? In 2018, I have purchased a mobile phone. So that transaction has already been included in the year of 2018 and 19 while computing the national income. Now say suppose in 2022, I am selling the phone, selling the mobile which I had in the year 2022. Then, is it a new thing in the economy? Is that a mobile phone new in the economy? Or is there a new transaction with first time fresh transaction happening for that mobile phone? No. The fresh transaction has already happened in the year 2018 and in the national income of 2018 to 19. 2022 mein what is happening? We are just selling the existing phone which was purchased in 2018. So this is a second hand product. So the value of the second hand product will not be included in the current national income. So in the year 2022 to 23, when we compute the national income for 2022 to 23, we will not include the selling of the mobile phone, be it be in profit, be it be in loss. We will not include because the transaction related to that product has already been done in the previous year. We can't show a fresh transaction. That is not something fresh which is coming in the economy. In the national income, we always include those things which has produced in that particular year, produced in newly, freshly produced in that particular year. Whatever, say suppose there was one phone produced in 2021 and while computing national income for 2023 to 24, will it be included in 2023 to 24? Should be included. A mobile phone produced in the year 2021 and while calculating national income from the year of the year 2023 to 24, should I include this mobile phone which was produced in the year 2021? Should I include it? If there is a phone which has been produced in the year 2021 and we know that national income is calculated on according to one financial year. So if now I am calculating the national income for 2023 to 24, will I include this mobile phone which was produced in the year 2021? No, I will not. In while computing national income, we will include only those transactions, only those goods and services which are produced in that particular year. Anything apart from that will not be included. So that is why we say sell and purchase of second-hand goods are not included while computing national income, as they were included in the year in which they were produced and do not add to the current flow of goods and services. But any commission or brokerage on sell or purchase of such goods will be included in the national income, as it is a productive service. Any brokerage or any commission, if happening by while selling and purchasing of a old good or a second hand good, then that will be included, because that is the first time which is happening in the economy. Now, what is brokerage or commission? Say suppose in the year 2018, A has purchased a phone. Okay, he has purchased a phone. So this might have calculated under the national income 2018 to 19. In 2020, B wants to buy a second hand phone and A wants to sell his phone. So C is the mediator. C is the friend of A, C is the friend of B. But A and B don't know each other directly. So what will C say? C will say, okay, fine, there is one of my friend called A who wants to sell the phone, and there is one my friend B who wants to purchase the phone. So I will be the mediator. With me being a mediator, you can buy and sell your phone. So A will say, okay, fine, take my phone and take my phone and sell it to B. So C will take that phone from A and sell it to B. In return, A is paying 20 rupees to C as commission. B is also paying 20 rupees to C as commission. Total 40 rupees C is getting, and this 40 rupees will be included in national income because this is happening for the first time. In 2020, so 2020 to 21, in this year's national income, we will be including this because this is a commission or brokerage, which is happening for the first time in the economy, in which the flow of goods and services and the flow of money is taking place. So we will not include the value of second-hand goods while computing national income. But if there is any brokerage or commission charged on that product or on that second-hand good, then that will be included. So if there is only mobile given to you in the question, second-hand mobile sell for 20 rupees. This you will not include. But if they tell you brokerage on second-hand good or commission on second-hand good, then that will be included in the national income. Okay? Is it clear? Second precaution, is it clear? Do you want me to explain once more? Selling and purchase of second-hand goods are not included because they have already been included in the year which actually that product was produced and sold. But any brokerage or commission, if it's charging, then that will be included in that particular year because that is happening in that particular year, right? That flow of money is happening in that particular year. So that would be included. Is it clear? Okay. Third precaution. Production of service for self-consumption or domestic services are not included. in national income. So domestic services like means what? Services of household, housewives, kitchen gardening, etc. are not included in national income since it is difficult to measure the market value. When our mother cooks food for us, we can't measure it with any value, with any money, right? We can't measure it with money. It is not possible. We can't measure it with price, value. So that is why all the domestic services are not included in national income. These services are produced and consumed at home, never enter the marketplace, and are termed as non-market transactions. So these things are not included in economy. Our mother making food for us. Um, my sister is a teacher who is teaching to me at home. All these things are not the part of an economy. They are not entering into the economy. They are not producing any goods and services or any flow of money in the economy. That is why they will not be included while computation of national income. But it should be noted that paid services like service of maid, drivers, private tutors, all those should be included in the national income. So all the paid services, like if there is a house help, maid is coming at your house, you are paying to that maid, so that will be included in the economy. Drivers, if you have a driver, personal driver, when you pay that driver, that will be included in the national income. Private tutors, if there is any tutor who is coming at your home to teach you or any tuitions you're joining anywhere, that will be included in the national income. If you have a cook who is coming at your home cooking food for you, that will be included in the national income. All those things will be included in the national income, but domestic services will not be included while computing national income. So that was an easy point. 4. Production of goods for self-consumption will be included. Even if the goods are produced for self-consumption, they will be included. For best example of self-consumption is farmers. Farmers produce wheat for their family, for themselves. Then also this will be included because there is some kind of production taking place in the economy. Even though it is for the self-consumption, there is something which is being produced in the economy. There is some output in the economy which is taking place. So in the national income, as they contribute to the current output, their value is to be estimated or imputed as they are sold in the market. So what price do we, now we will say that it is a self-consumption. Farmer is producing wheat and eating by himself. Then I don't know how much value it is. How will I include it in national income? He is not selling that wheat in the market. If he would have sold it, so I could have said, okay, 100 rupees it is. So I would have directly included 100 rupees in my national income. But now he is not selling it. He is doing self-consumption. He is eating it by itself. So that is why we will take imputed value. Now new term, imputed value. What is imputed value? Imputed value is an imaginary value. It is an imaginary value based on. So for say suppose the current market value of wheat is 200 rupees. So even if the wheat is for self-consumption, farmer has done the self-consumption, he is not selling it in the market. But I know that the current market value of the wheat is 200 rupees. So I will simply take this 200 rupees while computing national income, and this 200 rupees will be called as imputed value. Okay. So there can be actual value. Two types of value we take in national income. Further, we are going to study, but as of for now, also I'll inform you. Actual value is included in national income, as well as imputed value is also included in national income. Actual value means what? Actually, you are selling that in the market when actually that transaction is taking place. And imputed value means the imaginary value based on market value. So I know that even a farmer has done the self-consumption of that wheat. He is not selling that wheat in the market, but the present market value of that wheat is 200 rupees. So simply while computing national income, I will take 200 rupees for the value of wheat which has been self-consumed by the farmer. Is it clear? Any doubt? So even if production is done for the self-consumption, it is going to be included in national income, be it be the actual value, be it be the imputed value. Fifth precaution comes is change in stock of goods will be included. So net increase in the stock of inventories will be included in national income as it is the part of capital formation. Change in stock means what? Opening stock minus closing stock. This will be included while computing national income that we saw right now in the formula also it is there. So you have to include it. 6. Imputed value of owner occupied houses should be included. Imputed value of owner occupied houses. Again that means what? This is an imputed value. Imputed value means what? Just say for example, this is one flat in which owner himself is living. Okay. There is one flat in which the owner himself is living. Now we have to find out the imputed value of that flat. How can we find the imputed value? Very easy. Based on the market value. How we will find the market value? We will understand that in that locality, in that area, what is the rent going on for the flats? Or the owner himself, we will ask to the owner himself directly that what is the rent of your house. So he will say that at present the rent of my house is 1000 rupees. So even if the owner is living in that house, we can find out the imputed value of that house on the basis of market value. And then simply we will include this in national income. Very simple. Imputed value. So here this rent will be called as what? This rent will be called as imputed rent. Imputed rent means this is an imaginary rent which is based on the market value. It is not the actual rent. Actual rent means actually there is no tenant living in that flat. The owner himself is living in that flat. But what if the owner had given this flat to any tenant? Then in that case, tenant would have paid him 1000 rupees as per the market value. So this 1000 rupees is nothing but imputed rent or imputed value. Clear? People who live in their own houses do not pay any rent. True, but they enjoy housing services similar to those people who stay in rented houses. Very true. Therefore, value of such housing services estimated according to the market rent of similar accommodation. Similar accommodation. Now, at present, the market value of that area, that flat, that building is 1000 rupees. So, such estimated rent is known as imputed rent. Is it clear? Okay. Goods produced for self-consumption are included in national income. Just now we said that even if the goods are produced for self-consumption, they are going to be included in national income. So goods produced for self-consumption, their value, how we will take their value? By understanding the imputed value. Services produced for self-consumption are not included in national income. See, my major difference. Goods which are produced for self-consumption will be included in national income, but services which are produced for self-consumption will not be included in national income. Services like what? If my father is a doctor and he treats me, I'm not going to pay him, right? He's my father. Why will I pay him for his services? So that will not be included in the national income. If my mother is a teacher, she teaches me, I will not pay her. So again, that services I cannot pay for that services, so that will be not included in national income. So that is why we say good produced for self-consumption will be included in national income, but services produced will not be included in national income. Services produced for self-consumption, basically. Goods produced for self-consumption, we will include it in national income. But services produced in this for the self-consumption, we will not include in national income. Fine. Next is the problem of double counting. As it is, I told you what is double counting, how double counting leads to the problem in computing national income. So double counting will not be included while computing the national income. How to avoid double counting? So there are two ways in which you can avoid the problem of double counting. First, by using the final output method. According to this method, value of only final goods should be added to determine the national income. Like in the given example, value of bread was 1000 rupees, sold to final consumer should be taken in the national income. So as I said, if the pens are sold out in the market for 70 rupees and the intermediate consumption or the raw materials which needed for producing that pen was 50 rupees, then while computing national income, you should only take 70 rupees. So in that case, it is called as final output method. This is called as output method. Second alternative, value added method. Sum total of value added by producing unit should be taken in national income. So the next alternative to avoid double counting is, say suppose you have to add the values which you are getting from each alternative, from each producing unit. Like for say suppose farmer got 500 rupees for selling the bread. 200 rupees he had to pay to the miller for purchasing flour, and that is 300. So 500 minus 200 is 300. 300 should be included in the national income. That means which formula? Value added is equals to value of output minus value of intermediate consumption. This formula is called as value added method. So if you can use value added method, you can use final output method. Final output method means what? Including the final value of goods and services, and removing the value of intermediate consumption from the value of output. So both the ways you can avoid the problem of double counting, but here we are going to study value added method and not the final output method. Fine. This theoretical part, are you clear with? This entire was the theoretical part. Okay. Now just I'll be back in 2 minutes and then I will be giving you the formulas for value added methods. Okay, what all are the important formulas? You just have to remember all the formulas and the precautions. Numerical questions will be very easier for you to solve. Fine. Just take 2 minutes, recall everything what we did, and then I'll be back in 2 minutes. We'll write down the formulas and then see if possible we can solve one or two questions. Okay, let us continue. Are you there? Okay, fine. So all the formulas, very important formulas. First of all, starting with value added. Okay, value added. It can be called as GVA at MP. It can be also called as GDP at MP. The formula is value of output minus intermediate consumption. Okay, value of output minus intermediate consumption. Now, what if value of output is not given to us directly? So, the formula to find out value of output is equals to sales plus change in stock. Okay, if value of output is not given to us directly in the question, then the formula is sales plus change in stock. Now, what if sales is not given to us directly in the question? Then the formula to find out sales is quantity into price. And what is the formula for change in stock if directly not given? Change in stock is equals to closing stock minus opening stock. Okay. Change in stock is equals to closing stock minus opening stock. Now, while calculating GDP-MP or GVMP, you have to include primary sector plus secondary sector plus tertiary sector. Fine. Then, for sales, directly sales term given, well and good. But if domestic sales is given, then the formula is domestic sales plus exports. Same, if directly intermediate consumption is given to us, then well and good. If not given, then the formula is domestic purchases plus imports. Fine. So this is the most important formula. All the formulas are very important for solving the national income questions. Intermediate consumption will be given to you as purchases. At times they will be directly given to us as intermediate consumption. At times it will be given as purchases of raw materials, purchases or simply purchases. Okay, and at times to confuse us, they will give you both the things. They will give you purchases, they will also give you intermediate consumption. But in that case, you have to select intermediate consumption and no purchases. Don't add also purchases. Directly take the value which is given to you as intermediate consumption. Don't include purchases at all. Same thing goes for sales. If directly sales is given to you, don't look at quantities given, prices given, don't look at it. Directly take the value which is given to you in front of sales. Same for change in stock. If directly CIS, if directly change in stock is given to you, and if closing stock is given and opening stock is also given, don't look towards it. Just simply take change in stock. Don't look at closing stock or opening stock, even if it is given in the question. That is just given us for the confusion's sake, for confusing us. Okay, so with sales, there are possibility that they will give you domestic sales, they will give you exports, they will give you quantity, they might give you price, but you don't have to look towards any value. Only the direct heading sales is given and take that value. Change in stock, they will give you the value of change in stock. With that, they will also give you the value of closing stock and opening stock. Don't look towards closing stock and opening stock if directly the heading change in stock is given to you. Fine. So quickly note down the formulas and then we'll see the sums. While solving the question, you will understand that there are different alternative names for different things. So that you will get it while we start solving the question. Like this, you will not understand. If that much is done, let me know. I will change the slide. When we solve questions, at times they will mention you in the question that find out national income using value added methods. At time they will not mention this in the question. By looking at the components, by looking the things which is provided in the question, you have to identify, or you should know that here I will have to solve the question using value added method. Now first we are solving value added, so it is very simple. But afterwards what they will do, they will mix the components of value added, income and expenditure. So in that case, you should come to know how to bifurcate between value added components, intermediate income method and expenditure methods components. Done. This formula also write down. Sales, domestic sales plus export for intermediate consumption. They will give you domestic purchases, so domestic purchase plus import. Written? Oh, let us see the questions now. For solving any question, for solving any aggregate, first thing, the first aggregate which you will have to find out is GDP at MP or GVA at MP. First, you will have to find out GVA at MP. Once you find out GVA at MP or GDP MP, you can go to the next aggregate which has been asked in the question. But first and the foremost thing which you have to do is find out GVA MP or GDP MP. See, like the questions. I'll not give you directly the first one. It is a little bit confusing. Let us move to start with the second question. Okay. See, second question says you have to calculate GVA at FC. So for calculating GVA at FC, first thing what you will do is you will calculate GVA at MP or GDP at MP. Now only just finalize that what aggregate you are going to use. Otherwise, later on, at one place you will write GVMP, at other place you will write GDPMP, then that is going to be very confusing. Plus, you are going to lose your marks. So at the beginning stage only, you decide with which aggregate you are comfortable, GVMP or GDPMP. Whichever aggregate you are choosing, you have to continue and go on with that aggregate only. Don't keep on changing that at one place you are using GVMP, GDPMP. For one question, at least it should be the same. For second question, again you can choose whatever you want, but the entire question there should be a same thing, GVMP, GD or GDPMP. Don't mix it. At one place you are writing GVMP, then in the next part of the question you are writing GDPMP. Listen to me very carefully. In one question I am saying. In one question, if you are writing GVMP, then for the entire question write it GVMP only. Then in next question, if you want JDPMP, you can write it. But for one question, you should use only one aggregate for the entire sum. Okay. So now you have to calculate GVFC. So what did I say? For going to any aggregate, first of all, it is recommended to find out the GVMP or GDPMP. Once you find out this, you can find out GVA at FC or GDP at FC. How to go from one aggregate to another aggregate? We have already done that. So I don't think so there should be any kind of confusion, right? First of all, find out GVMP or GDPMP and then go towards GVMFC or GDPFC. Start solving. If there is any doubt, I'll tell you. Sales is nothing but, you know, rent while solving value added method, while solving so many, writing so many formulas, understanding the theoretical part, rent is not going to be there anywhere. Subsidies, it will be useful while we do the if we need NIT, right? If there is a need of NIT at that point of time, subsidies will be useful. So that you have to see whether NIT is going to be useful for us or not. Change in stock, directly it is given to us. So CIS, no need of doing opening stock, closing stock, anything. Purchase of raw material, this is nothing but your intermediate consumption. And profit, again, while doing value added methods, profit is not included anywhere. So two things are not going to be there anywhere. Rest all you are going to use somewhere or the other. So start solving the sum. First of all, find out GVMP, GDPMP, and then you can move to the aggregate which has been asked in the question, that is GVFC, GDPFC. 95. Let us check the answer. Okay. GVAMP you got as 95, right? GVAMP, GDPMP you got 95. Now you have to find GVAFC. So from GVAMP you have to go to GVAFC. Now find out the value of GVAFC. $105. Very good. Perfect. Very nice. Try the next question. You have to calculate NVA at FC. Okay. Now you can see the entire question. Solve. Okay. See, what is the formula? Value added or GDPMP is equals to value of output minus intermediate consumption. Now see, value of output directly is not given to us. Then what is the formula of value of output? Sales plus CIS minus intermediate consumption. So the sales value is 800 plus CIS is what? Closing stock minus opening stock. So 20 minus 50 minus intermediate consumption. So 800 plus 20 minus 50 is how much? Minus 30 minus intermediate consumption is given to us in the question. Yes, intermediate purchases. You will only include this 500. You will not include all the other things. While talking about intermediate consumption, we will only include this 500. So this 500 is there. Now 800 plus minus 30 minus 500. See how much are we getting? 800 minus 30 minus 500. 270. Now I got GDPMP in the question. What they are asking? GDPFC they are asking. So from GDPMP, I have to go to GDPFC. Sorry. The variable which we have to find out, we have to keep it on left hand side. So that is GDPFC. And the variable which we have to keep it on right hand side. So GDPMP. Now GDP remains as it is. We don't have to do any conversion. What we do from to go from MP to FC? What do we do from going MP to FC? NIT? Wait, it's NVAC. They have told us to find out NVAC, not GDP. They have told us to find out what NVAFC. That means NDPFC they have to find out. So minus NIT, that is MP to go to MP to FC, we will do minus NIT. And what do we do for going from gross to net? Gross to net, what do we do? Minus debt. So GDPMP we got as 270. Depreciation C is given in the question. So yes, depreciation is given as 30. So put depreciation as 30. NITC, if NIT is given to us in the question. So NIT is not given directly. Just the subsidies is given to us, right? IT is not given. Subsidy 40 is given. So what is the formula of NIT? IT minus subsidies, right? IT is not given, so it will be 0. Subsidies is 40. So that means NIT is how much? Minus 40. So minus 40. 270 minus 30 minus plus 40. Now you have to solve this. You will get NDPFC. So 270 minus 30. We'll see solving. 270 minus 30 plus 40, 280. And that is the answer. You get NDPFC. So what you have to do is, first of all, you have to find GDPMP, value of output minus intermediate consumption. Value of output directly it was not given, so we took the more detailing formula, sales plus change in stock. So sales is given to us as 800. So we wrote 800. Change in stock, we don't have, they have not given us directly. They have given a opening stock and closing stock. So sales CIS we know is nothing but closing stock minus opening stock. So 20 minus 50. And intermediate consumption. Intermediate consumption is nothing but intermediate purchases. So that is 500. So that 500 we took, we solved it, we got GDP MPS to 70. Now they had told us to find out NDPFC. So GDP MP to NDPFC we have to go, minus depreciation minus NIT. Depreciation is directly given to us. In NIT they have not given us IT, they have just given us subsidies. So IT is 0, subsidies is 40. 0 minus 40. That makes NIT as minus 40. So that is why here the value which we took was minus 40. And then after solving all of these things, we get this bracket. We know minus minus is plus. So here it becomes plus. Right? We know this multiplication. Minus into minus is plus. Plus into plus is plus. Minus into plus is minus. And plus into minus is minus. So that is what, this is the maths thing which we have solved earlier in our childhood. That is what we have done here also. Any doubts? You didn't understood anything? Should I explain it once more? Did you get how did we solve the sum? So just that much only we had to do. First of all, see the components which are given to us in the question. What are the components? What are they asking? Then see that what all formulas you will be needing. See, this is your starting phase. Refer to your formulas which I have given to you. Refer to your notes which I have given you. No issues. Starting 1 week, 2 weeks, whenever we will solve, refer to your formulas. No problem, no issues. But once you are aware of it, once you know how to do it, then you have to learn the formula, memorize it, and then solve it. It is very simple. As many as questions you practice, as many as questions you solve, you will get to know how to do it. In the next class also, we will solve 2 or 3 questions more, and then we'll move towards the next one. Okay, these are the simple things, very simple things. Just you should know the formula and where to put. Here, if directly value of output and intermediate consumption would have given in the question, then directly we would have used the values. But since value of output is not given to us directly, then we have to go in more detail. If sales would have also not given to us, then we would have gone into the more detailing, that is quantity into price. If domestic sales would have given, then we would have done so domestic sales plus exports. So likewise, you have to read and understand the question. Okay. So I had actually assigned one class test, but due to the time limit, we will not be able to do that class test in the class. So what I'll do is I'll see from the back end if it is possible. I'll just assign you the test privately on your dashboard. Okay, fine. So just go through everything which we did today. Go through the formulas and everything, and then in the next class also we will first solve 2 questions from this method only, and then we'll fine. Chalo, the lecture will end. We'll meet in the next class. Bye bye. Thank you. Good night.